All right, ladies and gentlemen, welcome back. We finally about to have some fun. How do that sound? Now that our software is downloaded and installed, and we have activated our licenses on the last page, now we can get a chance to load up our screen, load up our workplace to look like we're getting ready to make a trade. Also, we also in this particular module portion of the module, we're going to discuss these indicators and exactly how to read the indicators, okay? So now that we're in our NinjaTrader platform, right, the first thing we want to go do is click on File, Workspaces, drop down to Open Workspace, and remember we dragged and dropped the MIG workspace. Double click on that. Voila, we are here. We're finally arrived. Everything should be working okay. If you get a dialog box, please contact us and we can have myself or my assistant come and help you load up your charts correctly. Okay, let's start off here. In this picture here, we have you can see these bars, these green bars, right? And then you see these red bars, right? So what that is saying, when the green bars appear, that means, and let's use these little boxes here, which is we use Renko bars, the MIG Renko bars. These are synthetic bars. They are populated by the way the price move in the market, not according to the time in the market. Okay? So these bars will populate only if the market moved to a certain point. That's when it will populate a new bar. There are other bars that populate when time, so every 3 minutes, every 5 minutes, every 20 minutes, no matter where you want to set it at, a new bar will appear. But this is just based off what we call price action. And that should be in your terminology within your curriculum to explain what price action is, okay? But if you see the green, that means at that moment in time, the price was rising. If you see red bars, at that moment in time, the price was dropping. Very simple, right? You only have two directions in the market, up and down. Okay? Another terminology is that, which is on your terminology sheet, is long, which is green and up, and short, which is red and going down. So that's the only two things that you probably have to remember in far as going into trades is are we going long or are we going short? Right? So that's the candles. These arrows will populate every time what we call a pivot point, which means this is where the market turns around to the opposite direction. Okay, so this will populate when this candle appears. So this red arrow will let you know this is a pivot point into the market to say that it's going down. This green arrow will give you the pivot point when the market is beginning to go back in an upward trend. Okay, and vice versa. So that's what these arrows, and those are called your MIG arrows 3. Okay, so now we got this little rainbow color line here, which we have the green all the way down to the red, right? So when we see the green, the spectrum, when the green is completely on top of the red and it's beginning to flare out like it did here, that means that the market is trending in the uptrend. All right? It's trending in the uptrend. So your most profitable trades will probably be a long trade, which means the market is actually going long, is going up in the direction. So the trend spectrum says, and remember that we are traders, right? So traders, we trade with the trend. We don't predict the trend. We don't try to beat the trend. We trade along with the trend, and that will make you money constantly. Okay? So that's that. So you have a couple of things to let you know what trades you should get into right there just off back. So let's look down here. Let's then look at this kind of this thick white line. What I like to call that is the average price. Okay? So there's two things that you need to know about the market, right? Very seldom do the market move. Let me just put it like this. The market will always come back to this average price in the market. So there's two things that you have to know about the market. The market is either overbought or oversold. And no matter where those two things are, they're always trying to get back to the average price. And let me explain something to you. Overbought means there's too many people in the market buying. So the sellers have to come in to make it come back down to the average price, which is that white line, that average price of the market. So it's going to try to go back down. As you can see here, you can see that this was green. And look, sellers began to come in and they came back and touched our average price. Now, vice versa, if there's too many sellers in the market, that means that the market is oversold. So the buyers would come in to at least bring it up to the average price. Okay, and you can see that now that the red here candles, look at this. It began to go green. The buyers are coming in, and guess what? We hit that average price and went beyond it, right? And vice versa. So those two things you have to know. The market is usually overbought and oversold. But no matter where it's at, it's always going to search to get back to the average price. All right? Great. So that being said, if you look at our candles here, the green over red is a true buy signal. That means that it's time for you to buy into the market, right? So when we get red over green, that is the time to sell in the market. The time to sell in that market, right? And what we have here is what I call the MACD at the bottom here. Same principles. If your MACD is going green over red, that means it is time to buy into the market. When your MACD begins to cross on the downward and red begins to get over green, that means that we need to be selling in the market. So this is what your indicators are telling you. They're telling you when is the greatest possible time for you to buy in the market and when is some of the greatest times to sell in the market. Okay? And remember, we always want to trade in the trend. Okay? We are trend traders. Ride the wave. All right? I want you to think of yourself as a surfer. You would go out until you get the wave that you want. As soon as you get the wave that you want, you turn in the direction that the wave is going and you catch that wave and let it take you to shore. The same thing in the market is that you want to wait for the right wave, and when you find the right wave, you jump on that wave and let it carry you into a profit zone. So this is the indicators, okay? The rainbow, again, we have the first thing, the first indicators, which is your bar types, the MIG wrinkle bars, right? The green means that we're going long and the price is going up. The red means the market is going short and the price is going down. Then we have the MIG arrows. The arrows are indicating when there's a pivot point, when the market is changing directions. Then we have our average price and our buy and sell signals. Okay, so we got green over red, so it's saying that we're buying, but we get so high in the buying to where we say that we are overbought. So sellers are going to begin to come in, and look what happened here. We get red over green, and we going down, 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 and guess what? We are oversold now, and now we got to get the buyers to come back into the market. And guess what? It crossed over, and we now it's time for the buyers to buy again. And we hit the average price line and go beyond that. And we're going up and going up and going up. And guess what's going to have to happen? The sellers are going to have to come back in and push the price back down to at least hit the average price level. And it probably would go to oversold again. All right, I hope this helped you a lot to kind of understand these indicators and exactly how they work. Uh, I really believe that if you follow your indicators, which is an indication when something is going on in the market and indicating when you should participate in that something going on in the market, you should stay in profit. All right, that's it for this video, and I will see you on the next one. Thank you so much for watching.